How well do you know your employees? Could one of them be silently draining your business resources right under your nose? It's a question that may seem outlandish, but let's explore into the often overlooked menace of employee embezzlement. Imagine in businesses big and small, there's a hidden threat that can chip away at financial health, erode reputation, and destabilize the very foundation of the organization. We're talking about the silent, invisible danger of employee embezzlement. It's a reality that's more common than you might think. The impact is not just monetary. It's a blow to the company's morale, a dent in its public image, and a strain on its relationships with partners and customers. The impact of such a betrayal can resonate for years, long after the perpetrator has been dealt with. It's a chilling thought, isn't it? But worry not. Awareness and vigilance can be your first line of defense. Embezzlement often doesn't happen overnight. There are signs if you know where to look. Now let's take a look at some red flags. These are the subtle yet significant indicators that something is amiss in your financial ecosystem. Recognizing them early on can be the difference between a minor hiccup and a full-blown financial catastrophe. First on the list is sudden lifestyle changes. If an employee, particularly one with access to company finances, starts living well beyond their means, it might be cause for concern. Luxury cars, lavish vacations, designer clothing, these could be signs that they're playing with money that isn't theirs. Next, pay attention to those who are reluctant to take time off. It may seem like dedication, but in some cases, it's a ploy to keep prying eyes away from fraudulent activities. If someone never takes a vacation or resists job rotation, it might be because they're afraid their deception will be discovered in their absence. Another red flag is discrepancies in financial records. Unexplained transactions, consistent overages, or missing funds can all point to embezzlement. Keep a keen eye on your financial statements. Regular audits can help identify these anomalies before they snowball into significant losses. And then there's defensiveness. An employee who becomes overly defensive or secretive when asked about financial matters might be hiding something. It's essential to foster an environment where transparency and open communication are the norm, not the exception. Lastly, the overcomplicator. Some embezzlers create overly complex reports or transactions to confuse or discourage further examination. If your financial reports start looking like a labyrinth, it's time to dig deeper. Remember, these warning signs aren't definitive proof of embezzlement. They're indicators that something could be wrong. Keep in mind, it's always better to tread on the side of caution. Don't jump to conclusions, but don't ignore these signs either. Spotting these red flags early can save your business from a financial nightmare. Meet Linda, a bookkeeper for a small family business who almost ruined it all. Linda was a trusted employee, handling the company's finances with seemingly unwavering dedication. But beneath that diligent exterior, Linda was siphoning off funds, gradually and methodically, right under the noses of the owners. Over 5 years, Linda embezzled a substantial sum, causing a significant dent in the company's financial health. She manipulated records, fabricated expenses, and misdirected funds with a level of cunning that left everyone unaware of her deceit. But as the saying goes, nothing stays hidden under the sun. The owners began to notice discrepancies in their financial statements. They hired a forensic accountant who dug deep into the records. Slowly, the truth emerged, and Linda's scheme was laid bare. The aftermath was devastating. The business struggled to recover, and the trust within the team was shattered. Linda faced legal consequences for her actions, and the owners were left to rebuild their company from the ruins. But from this chaos, a valuable lesson learned. The owners realized the importance of vigilance, of regular audits, and of implementing strong internal controls. They learned the hard way that trust, while important, should not replace checks and balances in business. Linda's story serves as a stark reminder of the importance of financial integrity. It underscores the need for businesses to stay vigilant, to ensure their hard work isn't undermined by the ruthless actions of a single individual. So how can you protect your business from such threats? The answer lies in building a strong internal control system. Imagine your business as a castle. Like the high walls and drawbridges of yore, An effective internal control system safeguards your business from the lurking dangers of employee embezzlement. But what does this control system look like? Well, it's composed of three key elements: segregation of duties, regular audits, and a strong ethical culture. First, let's talk about segregation of duties. This doesn't mean you should keep your employees isolated from each other. Instead, it's about ensuring that no single individual has control over all aspects of a financial transaction. By dividing responsibilities, you're creating a system of checks and balances that makes it harder for any one person to commit fraud unnoticed. Next, we have regular audits. Think of audits as a routine health checkup for your business. Just as doctors can detect early signs of illness during a checkup, auditors can spot discrepancies that may indicate embezzlement. An effective audit not only scrutinizes your financial records, but also evaluates your internal controls, suggesting improvements where necessary. Lastly, but perhaps most importantly, a strong ethical culture is foundational to your business's fort. By fostering an environment where honesty and integrity are valued, you are encouraging employees to act in the best interest of the business. This means providing regular training, setting clear expectations about ethical behavior, and leading by example. These measures, however, aren't one-size-fits-all solutions. They need to be tailored to your business's unique needs and risks. It's about understanding your vulnerabilities and fortifying those areas. It's a continuous process of refinement and improvement. In the end, remember that the goal isn't to create an impenetrable fortress. After all, trust is an integral part of any business. Instead, it's about making the castle strong enough to deter potential invaders while still fostering a culture of openness and trust. Even the most prominent entities can be vulnerable to illicit activities. Let's look at some details of a Fortune 500 company's multi-million-dollar embezzlement scandal. Amidst the financial district of Wall Street, this corporation found itself in a crisis. A trusted executive positioned high within the company's ranks had been siphoning off millions for years, right under their noses. This wasn't an overnight operation. The executive had meticulously exploited loopholes in the company's internal controls, cleverly circumventing checks and balances that were supposed to guard against such fraudulent activities. The corporation, smug in its stature, had overlooked the necessity for rigorous audits, believing its established systems to be infallible. The fraud was eventually discovered, not by the corporation's internal mechanisms, but by an external audit, a routine check that turned into a shocking revelation. The fallout was catastrophic. The company's stock plummeted, its reputation was tarnished, and the trust of stakeholders was shattered. But this was more than just a financial loss. It was a wake-up call, a reminder that no entity, no matter how large or seemingly secure, is immune to the threat of embezzlement. It underscored the absolute necessity for robust internal controls, consistent oversight, and above all, regular audits. This Fortune 500 fiasco serves as a stark warning to businesses everywhere. Complacency is the enemy of financial security, a costly oversight indeed. This case underscores the need for vigilance, no matter the size of your business. Moreover, in an era of digital transparency, businesses are under the microscope like never before. A single unethical incident can cause irreparable damage to a business's reputation. So, it's not just about protecting your finances, it's about safeguarding your brand.